Hello everybody, welcome to the January 6th through 7th, Monday and Tuesday price review. Getting started, we have the NASDAQ on the left and the S&P on the right, and that daily fair value gap that we outlined this Sunday, that was our draw on liquidity, and as you can see, it got hit pretty well, and we got a strong reaction off of that. But I'm going to review exactly why I came to that conclusion of that being our draw on liquidity. So as you can see, at the lows that we have outlined, there was an SMT. Now, the reason why this SMT was high probability is because it was between the wick, as you can see. So there was an SMT between the wick, and also there was an SMT between the body, the closures specifically. So as you can see right here, this is the lowest close of the S&P, and that closed higher, making a higher low. And on the NASDAQ, this is the lowest close, and it made a lower low. And it is important that you remember that this is still in regards to time, even though this is not a part of the quarterly sequence that you guys know. This is still a low in regards to time. So it was the lowest point of December back in 2024, following the monthly to daily time frame alignment. And as you can see, whenever we drawed inside of that fair value gap, at the very high, we formed a TPD, which caused price to drop. And focus exactly where this candle opened up at. It opened right at the high of the fair value gap and closed a TPD right at the high of that fair value gap, which makes it higher probability because it is at a key level. So we're moving from a daily key level to an hourly TPD that gave a reaction to the downside. And I know some of you caught this. If you did, you did well, and you're on the right side of the market. All right, so now we're looking back at the daily chart for NASDAQ, and I'm going to explain why we had this downside movement today and why we had a intra-week reversal. So as stated in the previous live stream, I said depending on how we close within this fair value gap on the day that hits it, that will tell us and give us insight on whether we will continue trading and then trade into this high, or we will return back into these lows. So as you can see, the day that we hit that fair value gap, focus on the closure, it closed right at the low of the fair value gap and below the midpoint of the fair value gap. If we would have closed higher and closed like around here, that would have given me insight to look for this high. But since we closed below the midpoint and at that low, that's telling me that this fair value gap is giving a reaction, and we should look for something else for price to turn the next day. So looking at the NASDAQ and the pound, yes, we're bringing the Forex triad into the equation now. As you can see, we had Monday, Tuesday, Thursday, and Friday. Monday, Tuesday, Thursday, and Friday. So we have that range. So it was the previous week's range. So as you can see here, from this high to this low, that would have been the previous week's range following the premium and discount sequence. But on the pound, it was from this high to this low. So whenever you have a miscorrelated high or low in a premium and discount sequence for another asset. Now, what do I mean by that? As you can see here, Monday was below this candle and below this candle. But on the pound, Monday was the highest point of the previous week. Whenever you're comparing assets, sometimes you have to allocate for the previous candles before the highest point, if the other asset allows it. So I'll say that one more time. As you can see, Monday, Tuesday, Thursday, Friday, that is the entire range. But for here, Monday, Tuesday, Thursday, Friday, this is the entire range from this high to this low. And then we have two candles before that that match with what the pound is doing. So we have to allocate these two candles into the equation. So we're stretching the boundaries a little bit, but it's for a reason, because this still follows within the premium and discount sequence. So this is how you can gauge premium and discount better whenever you're looking at intermarket analysis. And many times you will have to do this. So as you can see, price was closely correlated. We had this premium fair value gap right here that price traded into. The pound was in premium. And if we go from the daily chart to the hourly chart, you will see there was a clear-cut SMT. So an intermarket SMT with the previous day's high. Now, where was price retracing to on the NASDAQ? What did I teach you in the Back to Basics series on the asset that creates the failure swing? NASDAQ traded into the fair value gap. The pound took the high. Now, there was a little bit more inside of here that could have given you extra confirmation, but I have to guide you guys down slowly before we get into more advanced stuff. So some of my more advanced students, you guys already know, there was some more things that tipped its hand, but we have to start off slow, and I have to show you the general rules before we get a little bit deeper. So if you can understand this, then you will be good. All right, so now we're looking at the NASDAQ currently for where it is priced at. Now, what I would like to see is this fair value gap being retraced back into, and then continuation lower, taking out this sell side liquidity, and then maybe reaching for that 2770 level. So hopefully you found this one insightful. Good luck and good trading.